branded as CashUp by Evergreen. My name is Ken MacDonald, and I am the Senior Vice President of Innovative Products here at Evergreen Home Loans. I've been in the mortgage industry for 20 years now, and I happily joined the Evergreen family this past October. My primary responsibility in joining Evergreen has been to focus my attention on the CashUp by Evergreen product offering. As far as the agenda is concerned, we have a lot to cover. Very first and foremost, I'll go over a brief history of who we are as Evergreen Home Loans. We'll then jump right into the CashUp by Evergreen program. I'll start off with an overview of the program, and then we'll get more detailed. We'll get into eligible home buyers and property types, how to submit a CashUp offer, and finally, what to expect during a CashUp transaction. We have a special guest today, Mark Gonzalez. Mark is a loan officer out of the Stockton and Tracy, California Evergreen Home Loan branch offices. So we'll talk about his experience with the program. And lastly, we'll have a live Q&A session between Tamara Rieger and myself. Tamara is the Chief Operating Officer here at Evergreen Home Loans. She is what I like to refer to as also the Chief Architect of the CashUp program. She poured in a lot of time and energy into getting this program off the ground, which took quite a bit of time. Important to note, there is a chat function that you can use in Zoom to submit your questions. Tamara will also be answering those questions live. And then again, at the very end of the session, we'll have that live Q&A piece where Tamara and I will be engaging and answering these questions, asking questions, answering questions, hopefully to help out the group at large. So moving right along, about us. So Evergreen Home Loans is headquartered in Bellevue, Washington. We are a full service direct lender with more than 65 local offices, on the West Coast. As a former real estate agent, President Don Burton founded Evergreen Home Loans in 1987 with this idea that his business would be one that delivered what was promised with no surprises. For over 3 decades, Evergreen has served neighborhoods with affordable home loan products while focusing exclusively on home lending and supporting our real estate agent partners. So important to note, this company was very much founded with the real estate agent in mind. And it's amazing how we see that on a daily basis. The partnership with you, our agents, is paramount. And one thing that we always strive to do is to think about out-of-the-box solutions and innovative products to help you guys succeed. One of those products is CashUp by Evergreen. So what is CashUp by Evergreen? In the simplest terms, CashUp by Evergreen is a unique program designed for home buyers who require a mortgage and need a more competitive offer to help them purchase a home. This program gives them the ability to make a cash offer and really level the playing field when competing against other cash offers or offers for more money. So how it works, again, keeping this very simple. Your client is pre-approved as a cash buyer with Evergreen Home Loans. Your client and yourself will then go out and make a cash offer with no financing or appraisal contingency. Evergreen will then buy the home on your buyer's behalf and transfer it after their permanent home loan is established. All right, jumping into eligible home buyers and property types. So home buyers who have the following minimum down payment without the needed to sell an existing home. So owner occupied, they need to have at least 10% down. Second home, 15% down. Investment property, 20% down. Important to note, those restrictions are, after we buy the home, we then put that borrower into a permanent loan, and we need to be able to sell that loan to either Fannie Mae or Freddie Mac. And there are LTV restrictions on those property types. Conventional loan only, up to the high balance limit. No jumbo or government loans. I'm going to throw in a little teaser here. We are working as fast as we can on a jumbo solution. And important to note, on government loans, we can make an exception on VA loans so long as that LTV is at or below 90%. Debt to income ratio needs to be at or below 45%, and that FICO score minimum is 700. Again, as I talk through all this, exceptions can be made, and we're certainly more than willing to entertain one-off exceptions. What we'll look at is compensating factors. Just the other week, we had a FICO score that came in at 696, but that buyer had a lot of assets and a relatively low DTI, so they were approved. Property profile. Primary residence, second home, and investment properties are all eligible. 1 to 4 units. One of the only stipulations as far as property types, no condos or manufactured homes. Property cannot be in a distressed condition. Those last 2 bullet points that I just mentioned, a lot of that has to do with just the timing of the transaction. Condos, manufactured homes, they can take a little longer to approve. And then, of course, a property that's in a distressed condition or in need of rehabilitation can also take a long time to get from cash close to potential loan close. So we try to steer away from those. Properties must be located in the following 6 states: Washington, Oregon, California, Idaho, Arizona, and Nevada. So, a very important question we get: how do you submit a CashUp offer? So, again, before the offer, your home buyer is fully underwritten and approved for the CashUp program. This is called a Security Plus approval at Evergreen. Your buyer then finds a property. Evergreen loan officer then completes a CashUp approval request form for that specific property and submits it to myself. And then the CashUp offer for that property is approved, and a certificate is provided to present with the offer. So what I'm doing is I am looking at your borrower and your buyer's financial picture, and I'm looking at that property that they'd like to make the offer on. And then I'm looking at what they're willing to offer, especially if there's escalation, and just to make sure that they have the assets in place to afford the down payment and any other potential closing costs. And also a little bit of a buffer just in case there is an appraisal shortfall, which I will get into momentarily. So once that offer is accepted, important to know for agents. So the real estate agent prepares the purchase and sale contract with the following: the buyer's name and or signs, and then we add an addendum that reads very specifically: Evergreen Money Source Mortgage Company as nominee for buyer's name and or signs. It's made mention that this is an all cash offer, no financing or appraisal contingency, only contingent on a home inspection, or of course, if there is a pre-inspection or seller provided inspection in place, then that inspection contingency is also waived. You will need to designate our dedicated title company, which is dependent on state. So Stewart Title and Escrow in Arizona, California, or Washington properties, Fidelity National Title in the state of Oregon, Ticor Title in the state of Nevada, and then Northern Idaho Title or Stewart Title in Idaho. So it kind of makes intuitive sense. Your Northern Idaho Title for Northern Idaho, Coeur d'Alene, Sandpoint, and then the Boise MSA would use Stewart Title. Minimum 2% earnest money from buyer presented with the offer to be held at escrow, and a minimum 10-day close. Just to go back to the dedicated title company, because this is a question that we commonly get. We have worked and spent hours and hours and hours both vetting our dedicated escrow and title companies, and also kind of training in tandem with those companies. We've also done our absolute best to negotiate fees to make it as cost effective for your buyer as possible. So to go away from these dedicated title companies, it could mean it's more expensive for your buyer, and the process is not as seamless and streamlined. I will make mention that we did go, what I say, we went rogue on a transaction at the end of last year, and it was really confusing and we had to negotiate those fees because it looked a lot more expensive than what we were advertising. All right, what to expect. So what to expect during a CashUp transaction. So the home inspection is required to solely address any health or safety issues. When we get that inspection, I will review that inspection. The first thing I do is I look for the summary in the inspection. So that summary will show and call out any of the major defects. So I want to look at those major defects just to see exactly how major they are. And do I think that this could present a significant challenge, again, between cash close and loan close? In majority of situations, even if it's called out as a major defect or major concern, it's really not that major. It's replacing batteries in smoke detectors and CO2 detectors. And so they're relatively easy fixes that would also get called out by the appraisal. Evergreen is the buyer and will close with cash on contract expiration date. Borrower financing occurs after Evergreen closes on the property. Evergreen will order an appraisal. However, it's for the borrower's financing after the cash sale closes. So again, and it's very important for me to call this out, we are not ordering an appraisal for that cash close. We are merely ordering that appraisal for the subsequent loan close. So in some of our regions, those appraisals take a little bit longer than other regions. So we like to get those appraisals ordered pretty close to the time of mutual acceptance. If the appraisal comes in lower than the purchase amount, the transaction will still close, meaning that we've already bought the home with cash. So you don't have to worry if that appraisal comes in low at that point in time. What fees to expect? So in order for your buyer to partner with the CashUp program, there's a flat $1,950 administration fee. Title and escrow and property transfer fees typically range from about $2,000 to $5,000 per transaction. And this range is dependent on a variety of factors, which is why we'd want you to contact your Evergreen loan officer for your loan officer to create a customized scenario and get those fees really dialed in. Important to note, there's no excise tax on the transfer to your buyer. And this is one of the reasons why we use a dedicated title and escrow company that know exactly how this program works. Rent back. So prior to Evergreen purchasing the home with cash, the buyer's agent will procure and fill out the rental agreement to be co-signed by the buyer and Evergreen. Rent back after cash closing is a requirement, even if the borrower does not intend to occupy the property. A per day charge will be assessed at the time of loan closing, and that calculation is based off the sales price minus earnest money deposit times 4%, which is the approximate cost of funds percentage for Evergreen, and then that's divided by 360 days. Right before this meeting, I did a quick calculation. So if we had a $500,000 sales price, 2% minimum required earnest money would bring that down to $490,000 times 4% divided by 360 days equals $54.44 per day. So again, it's interest only. There's no principal in there. So it's a relatively inexpensive charge. That rent back agreement and charge will terminate once permanent financing is established. And the real estate agent will turn over the keys after cash close or hold those keys in a key box to be delivered to the buyer at loan close. So to summarize that, your buyer has the ability, if we can close in as little as 10 days, your buyer has the ability to get handed their keys to their dream home within 10 days. We've had situations where we've had buyers and borrowers living in a hotel at an very expensive cost, obviously, waiting to get into the home. So if we think this is an amazing, addition to this program, this rent back feature. So some what ifs, and again, this our marketing department did, I think, a terrific job of putting together this deck, keeping in mind some of the common questions that we receive from our agent partners. So my client loses their job or no longer qualifies. So obviously this would be a horrible situation. But if this happens, that's exactly why we have that minimum 2% earnest money in place. So let's say Evergreen buys the home on behalf of your buyer, and then between the cash close and the loan close, your buyer loses their job or no longer qualifies. In that situation, Evergreen would retain that earnest money, and we would then, as quickly as possible, go ahead and try to relist that property, most likely trying to use that same selling agent who Evergreen bought the home from in the first place. We believe that the costs associated with relisting the home would probably exceed that 2% earnest money. So really that 2% earnest money is just to help kind of offset some of those costs. Next question, my clients need to sell their home first. So in order to qualify for CashUp, your buyer needs to have those assets in place in order to afford the down payment, earnest money, and again, a little bit of a buffer for extra assets in case of an appraisal shortfall. So at this point in time, we do not allow a contingency on the sale of a departing residence. But just as a teaser, we're working on something and we're very close to finalizing something to get by this. My clients backs out or wants to use a different lender. This kind of ties into the first bullet. If we close with cash and Evergreen buys your client's home, and then the client decides they want to go elsewhere for loan financing, we would end up retaining that earnest money. Lastly, the listing agent wants to use a different title and escrow company. This goes back to an earlier slide. We require the use of these dedicated title and escrow companies that we have assigned per region. Again, it just makes for such a smooth transaction. And when time is of the essence and we need to close in 10, 12 days, we need that title and escrow company to know exactly what we're doing. All right, what if the appraisal comes in low? So here are the 3 steps that occur in the event the appraisal comes in low. First, borrower has enough in liquid assets to pay the difference between the purchase price and the appraised value. Second option, we increase the loan to value on that permanent financing to cover that gap. We can go above the 90% maximum LTV by exception. Of course, that 90% minimum, or I should say maximum LTV, is specific to an owner-occupied property, but we can go above that in order to bridge that gap. And then lastly, a combination of those 2 options above. So maybe it's the borrower brings in a few $1,000s, and we also go up to say 92% LTV, and then we're squared away. All right. We are up to our interview with Mark Gonzalez. Just to introduce Mark Gonzalez, Mark is a loan officer and works out of the Stockton and Tracy branches for Evergreen Home Loans. He's been a loan officer for 20 years and specializes in helping first-time homebuyers purchase their dream home. Mark enjoys building partnerships, interacting with people, and closing tough deals. When he strategizes and works on closing challenging home loans, it strengthens his knowledge and enables him to help his agent partners and customers succeed. When he isn't working, you can find Mark watching the 49ers, go Seahawks, or coaching his son in basketball. So without further ado, welcome, Mark. Thank you so much for joining us this morning.
Thank you, Ken. Thanks for having me here. I'm excited for this program, this CashUp. I love it.
Absolutely. And I must say, one of the reasons why I really wanted to interview Mark is because of his just overall enthusiasm for the program. You can see it when you're reading emails from him and when you're talking to him on the phone. He is absolutely ecstatic about this program and has really taken it upon himself to become a subject matter expert. Without further ado, let's jump into these questions. So first and foremost, Mark, what are some common questions you hear from your agent partners?
Most of the questions that I field on a daily basis, it's simple. It's what is the catch, Mark? How is this possible? How is this program possible? How long does it take to close? How is the contract written? What if the house doesn't appraise for the loan? Those are the general questions that I receive on a daily basis for this program.
Got it. Okay, great. And a lot of those questions, we addressed at this point into the presentation. But yeah, I mean, that's where we really want to be mindful of the questions that you, our agent partners, have. It's extremely important that both listing agent and selling agent really has a certain level of comfort as it comes to this CashUp program. Second question, Mark, what is the biggest benefit of this program for your agent partners and clients?
I feel the biggest benefits to our realtors and clients, number one, is time. As you know, time we can't get back. And we spend a lot of time in this business. We feel that if we can reduce the amount of time it takes to get an accepted offer, there's less hours of shopping. That time could be spent at home with family, or it could be spent with, doing other things to generate business for yourself as a real estate agent. The client will get an accepted offer faster and also be competing with a smaller pool of people. Just to give an example, maybe the client is putting in an offer and they're competing with 20 different offers, and they're all similar. They're all financed borrowers, maybe a couple cash clients, etc. Right? But they're going to compete now, instead of the 20, they're going to compete with like maybe 3 people. So basically, we're reducing the amount of people they're competing with, putting offers on that same property, giving them a higher percentage of getting that accepted offer. The other thing is the realtor earns their commission in 10 to 12 days as opposed to 30 days. And the other bigger one, for the seller's eyes, is no loan contingency and no appraisal contingency.
Love it. No, that's great. Yeah. So, something that I've also encountered is the fact that you have agents who want to be able to offer cash program, but they don't want to go work for one of these iBuyers, right? And with the CashUp program, you as an agent can work with Evergreen Home Loans, and you can obviously still work for your traditional real estate company, which we love. There's no middleman here. We're dealing real estate company, mortgage company, and we're kind of marrying the two and creating this program. Next question. We are obviously experiencing a very highly competitive market, nationwide, but especially on the West Coast, due in large part to low inventory. Do you see this program as a game changer for real estate agents and customers?
That's an easy question to answer. Before CashUp, the situation would be like this. We're in this crazy market right now, and I'm constantly strategizing with my realtor partners on what we can do to make this offer look better. Maybe shorten the closing time, maybe shorten the loan contingency, shorten the appraisal contingency, and offer a good amount, things like that. And really, it's the same thing over and over again. Why I'm so excited about this program and why I love to utilize this program is it's a major tool for my clients and for my realtor partners. And just to paint a picture of the magnitude, prior to CashUp, we're submitting offers at a good price. You got your 30-day escrow, 17-day loan contingency, 15-day appraisal contingency. The loan is underwritten in escrow, and we all know that once in a great while, surprises happen. The client makes a mistake they shouldn't have made, or just something happens once in a while, right? Well, wouldn't you want to know that before going out shopping, as opposed to when you're actually in escrow, right? The other thing is the loan conditions. You'll have a couple conditions to satisfy prior to document conditions. That's before CashUp. The beauty of this program is what we can put in front of the seller now. 10 to 12-day close, cash offer, no loan contingency, no appraisal contingency. The loan is already underwritten, so we know we're good to go, and no prior to doc conditions. In my opinion, the seller's gonna have a much bigger appetite for this offer as opposed to the others.
Love it. All right. So with a low down payment requirement and relatively low fees, do you think CashUp could help more first-time homebuyers compete?
I definitely think that this will help first-time homebuyers compete. Right now, first-time homebuyers, there's a lot of them. A lot of them, hey, they just got married, had a baby, and they want to buy their first home. And in prior, a year ago or a little bit longer, it was easier for them to get an accepted offer and be able to move into their home, and they accomplished their goal. But I think the biggest thing is a lot of first-time homebuyers don't have the cash reserves that investors have and people that are selling homes, and it's making our great first-time homebuyers struggle in this market. There's not enough that they have to be able to compete. So with the fact that we lowered the down payment from 20% to down to 10%, it's hard to come up with 20% for a down payment. It's easier to come up with 10%, right?
Sure.
So I think that this tremendously elevates their game in the market, because these first-time homebuyers now can be considered a cash buyer, and that's the strength and the beauty of it.
That's great. Any advice on how real estate agents can get started with the CashUp program?
Yes. My advice is jump on this webinar, learn the CashUp program, and contact your Evergreen loan officer as soon as possible. We don't have time to waste. We're in a busy market. Homes are listed. Homes are sold within just a very short period of time. So get this tool in your tool bag, be able to reach out to more clients, be able to do more business as an agent. That's the other thing. If you are an agent and you're associated and co-branded with us here at Evergreen, this gives you the opportunity to be able to do more business and find more clients. Because when you talk out there in the field, it's a lot of just the same stuff. But what do you have in your tool bag that's going to set you apart from the rest and be different from the same? It's going to be talking to the client and letting them know, hey, you know what? If you've got 10% down, I've got a great lender that I can refer you to, and they're going to be able to make you, instead of getting finance, submitting an offer for a finance loan, you're going to be considered a cash offer now, and that's tremendously going to help. That's going to draw more questions. It's the realtor is going to talk to more clients, and clients are excited when they hear this. They're like, how do we do this? How is that possible? Well, so as a realtor, you want to co-brand with Evergreen. You want to utilize this program, communicate this program to your clients, have them talk to us, and this can really elevate your business as a realtor. That's just my opinion.
That's great. Yeah, and one thing that I commonly think of, and especially as I've seen this program really catch fire, it seems like at first it very much was more slated for a buyer who had lost out on multiple offers, and they were frustrated, they were discouraged, and it's almost like, okay, I give up. I'll join forces with an all cash offer. What I'm starting to see is we have agents that are placing their buyer into this product offering on their very first offer, because they just know just how competitive it is. And when you put numbers around it, with the admin fee and those additional CashUp costs, many of which are coming from the title and escrow fees, if you're getting a $500,000 home and you can pay $4,000 and automatically be thrown into that bucket of cash buyers, and I think, Mark, you said it perfectly. If there's 20 offers and only 2 of them are cash offers, and then you can put your buyer into that elite grouping of cash buyers, well, then all of a sudden you've eliminated a lot of the competition on that offer. All right, Mark, lastly, any other parting words before we conclude this interview?
Yeah, I would like to just say this. I'm very proud to work for Evergreen Home Loans. I think that being that our CEO and company commander, being a realtor before Evergreen existed, has put us in position to, in any market that we're in, to bring more value and not just the same stuff to our realtor partners. So, I'm very proud to work for this company because of the position they put us in. We're always looking to bring more value to our realtor partnerships, and this was a big one. I'm excited to see how this program is going to continue to evolve and the things that are coming here in the near future. And I'm just super excited about this. I think it's a game changer. It's perfectly meant for the market we're in today.
Great. Well, thank you for your time this morning, Mark, and thank you for sharing your experience. And I'm sure we'll be talking soon.
Right on, Ken. Thank you very much for having me.
All right, go Seahawks.
No way.
All right. Next up, we have our Q&A session. again, Tamara Rieger, our Chief Operating Officer, and again, Chief Architect of the CashUp program, will be joining me, and we'll be going through some questions that you have submitted through the presentation. Again, hopefully many of these have been answered, as we've gone along the presentation and in my interview with Mark. But without further ado, Tamara.
Hi. Thank you, Ken, and wonderful job on your presentation today. The materials answered so many of the questions. Our last webinar we did 2 weeks ago was more high level, and so we really made a point of going a little bit of a deeper dive. So the questions, I've answered 11 questions in the chat, and honestly, so many of your questions were answered in your presentation.
Great.
And so if anybody has questions they'd like to submit in the chat, I'm not seeing like a common theme on anything that we would really have to address. And so I don't know if there's anything you'd like to cover that maybe wasn't in your presentation.
I'm trying to think here. Yeah, and to your point, Tamara, we had an overwhelming amount of questions after last presentation, and our goal was to keep it very high level as to not get too far into the weeds. And what we quickly realized was our agent partners in this market especially seem to really want to get into the nitty-gritty and the details. So as Tamara mentioned, we made a really big effort to look at all the questions that were posted in last webinar and kind of turn that into actual material that we included on the slides.
Yeah, I do have a few that came in I can answer live.
Sure.
You can help me, Ken.
Yeah.
So we have a question that asked, we talked about no contingencies, yet you want to do an appraisal and an inspection. Without those contractual provisions, that can be a little problematic. Do you use an addendum to cover, or is that up to the broker to draft and cover? I think there's probably 2 transactions where we ran into a seller that did not want to allow us to access for an appraisal. I know in those cases, we obtained the appraisal after the cash close. Preferably, we would like access for our appraiser. And so that's why we do include it in our guidelines. And Ken, I don't know if we specifically have it addressed in the purchase and sale contract. So that might be something as a takeaway to make sure that we can access the property for an appraisal if one's needed.
Yep, and I do believe that is listed in the. I know for sure it's in the program, the CashUp program agreement, which is of course assigned by the borrower. But that's a good question as far as digging into the purchase and sale agreement, see if that's listed in there.
So another one, and I'm trying to answer in the chat too, but we need assistance from the agents on how to ensure we can get access. And so the next question is, what are all the benefits to Evergreen for this program? Well, one is we're helping our borrowers get into the houses. And I mean, for us, we're not real estate agents. We do loans. So for us, the benefit is that we get that end loan. And so the problem right now we have in our business as a lender is we have, like last month, over $1 billion in customers looking for houses. So a potential $1 billion in closings if they could find a house. So the benefit for Evergreen is we're helping the borrowers up front figure out how they can win their offers. But for us as the lender, it results in a closed loans. We're in the business of doing loans, and it helps our real estate partners be more successful. So that's the benefit for Evergreen. And Ken, I don't know if you have anything to add to that, but we want to do loans.
Yeah, no, I mean, I think you hit the nail on the head, Tamara. I mean, I think there's a very much an indirect benefit as well, which is just helping your buyer and our future borrower just with an option that they really would have a hard time finding elsewhere. And so I think that's huge. And, that's where, and I think Evergreen, we're all about that future business and the future, refinance and taking care of your buyers, family members down the road. And so to build that trust, I think is huge. And offering a program like this does just that. You can have a buyer who has a lot of assets and are super well qualified. They've done a great job managing their credit, but they just can't win an offer because this is such a competitive market. And so to be able to have this product and partner with them on this product, I think is huge and does build that kind of strong bond.
And so I put this one in the chat too, but there was a question on, how many have we done?
Mm-hmm.
And so when I rolled out the program, we were in pilot for a few months to make sure that we could successfully close. Last year we closed 13. This year we've got 6 right now closed. We have probably about 30 approved, and they're looking for properties. We do have those that have gone out and have a CashUp offer on a property. And the times I see our cash offer get beat out is someone else is willing to come in and offer more money, come in with more cash up front. So of course, buyers are cautious about, well, how much am I really willing to pay? So we've seen a few of those where, they kind of start over and they're looking for a property. So quite a few, I think, Ken, you have out there looking for properties.
Absolutely. And it does seem, it's amazing. Once the buyer is approved with CashUp, they make that first offer with CashUp, and let's say they do lose out in the offer. It's amazing how quickly, I've seen it where within 24 hours, that same borrower is making an offer on that next property. And maybe they did kind of increase that max offer amount a little bit. Maybe they found a property that's a little less expensive. But it's pretty amazing seeing how sticky these buyers are with this program. And it's once they make an offer with it once, even if they don't get it, they want to keep using it because they know it's critical to have that all cash offer behind them and all the other benefits that go along with this offer, the quick close, the little to no contingencies, and all that.
And so we have another question here, and I'll try to interpret it the right way, and you can help, Ken, but this might go back to what the fees are, but the question is, what money is required at transfer from Evergreen to the buyer? And I think what they're asking there is that when we close the loan with our cash, and it's not a loan, we're closing the transaction with our cash. And then what type of fees apply when Evergreen transfers it to the buyer?
So I feel like this kind of goes back to my interview with Mark. When Mark, I think right away he brought up one of the agent's questions is, what is the catch? This kind of falls in the category is there is no catch. We don't charge any sort of massive or secret fee to go into that permanent loan financing. It really is. We're just handling that just like it's any other loan, almost like we're not even thinking of the fact that we actually own this home now for a short period of time before that loan closes. So really, it's just standard fees that are associated with obtaining permanent financing on a mortgage loan. There's no increase to interest rate. There's no additional eighth or quarter to your rate in order to pay for the use of this program. So that permanent financing is very standard.
And so this one might be a tough one to do live unless you stop your screen share, but the question is, can you show an example of what the proof of funds certificate looks like? And that is it's our CashUp certificate. And it's a pretty simple certificate, but we do provide it to the agent to attach to the purchase and sale agreement that serves as proof of funds, telling the seller and the agent that this is backed by Evergreen Home Loans. I've had agents tell me it's better than cash because you have a company such as Evergreen who's been around for 35 years and it's backed by our cash. We step in and buy the house no matter what. So it doesn't matter if something derails the borrower's permanent loan or the end financing. As far as the seller's concerned and the agent's concerned, this is cash and it's Evergreen's cash. And if we buy the house and the borrower ends up not doing their loan, it's backed by Evergreen. So we almost were going to call it better than cash, but we went with CashUp. So I would probably ask you to talk to your loan officer, and they can provide a sample of the certificate.
Yep, absolutely. And just a follow up on that, Tamara, and I get this question a lot. I don't think I covered this in this presentation, but how quickly can we turn around the CashUp approval? So I'm proud to say we have a stated turn time of 2 hours. I'm going to say it's more like a half hour. The issuing the CashUp approval, which requires my reviewing of the property of the borrower, is from the time I see the request to getting that CashUp certificate out to the agent is typically half hour. Half hour if it's a really slam dunk deal, the borrower has a lot of assets, and it's a very clean looking property. It can be as quickly as 20 minutes at this point. I've gone to great lengths to really streamline the process and make it as fast as possible. So again, your buyer is pre-approved with Evergreen, and they're out searching for properties. They find that property. And I will say I've had it where it was 11 o'clock on a Saturday morning, and I got an email saying my borrower found a property. They need to submit their offer by noon. And so I have an entire hour to get that approval back, and I go to work immediately and get that turnaround very quickly. And yeah, to Tamara's point, we've gone to great lengths to make that CashUp certificate professional as looking as possible. And so we have I myself sign it and date it. A loan officer signs it and dates it along with their NMLS number, and then we have the buyers sign it, and then there's a place for the seller to sign it as well. It lists on that certificate that it is to be considered a proof of funds, and we also list out on that certificate and that there are no contingencies unless we still have that inspection contingency in place. But many of them that we do, again, we already have that inspection in place. And so I list out very prominently no contingencies. So it's a very powerful document to be submitted with that offer.
And then I did answer, let's see, I answered one in the chat, which was about the fees. And so I let everybody know in the chat that the extra fees is the rent back. We would also have the $1,950 CashUp admin fee. Mm-hmm. And then there's some hard costs we incur when we close with the loan, which is we have an escrow fee that we pay at that time. And there's some title fees, but that's on a $500,000 loan or $450,000, I guess $450,000 purchase price. I've seen it on average about $1,400 to $1,500 in reimbursements. And I might not have answered that second part of that question, is about that rent back. Ken, do you want to just answer how you estimate that rent back amount?
Yeah, absolutely. So, the biggest, I guess, starting point for that rent back amount is just how many days the buyer is going to occupy the property leading up to loan close. So from cash close date to loan close date, that will be the number of days. And then it's thrown into that equation: sales price minus earnest money times the 4% interest rate, divide by 360, and that's what gives us the per day charge of rent back. And then of course we multiply that per day charge by the number of days, and then that's the final amount that the borrower will be charged.
And here's a good one. I don't know if we talked about it in the slides, but can you explain at what point the buyer deposits funds? Because we've got buyer's earnest money, and then we also have the down payment for the loan later. Can you talk about that?
Absolutely. And that's where, again, we've had these dedicated, title and escrow companies. So they're very aware of the timing of these different, transactions. So that earnest money is going to be most likely collected earlier on in the process. So after we go into mutual acceptance, then title escrow will reach out to the buyer and with wire instructions and instructions on how to get that earnest money to title escrow. And then as far as down payment is concerned, we give I should say more flexibility with that. We require that down payment, again, minimum 10% on owner occupied, 15% second home, 20% on non-owner occupied. We require that down payment to be in title escrow within 48 hours prior to cash close.
Great. And this next question is a really good one because I think you can touch on how our Security Plus program works, Ken. But the question is, can a client be approved for the CashUp program before identifying the actual property they want to purchase? So I think that might lead into our Security Plus to start. Yep,
absolutely. So yes, this is what we encourage you to do and kind of encourage you to push your buyers into getting that pre-approval with Evergreen. So that is called our Security Plus. And we have, last I checked, I think we're well north of 50% of all loans that close at Evergreen Home Loans, that borrower had Security Plus in place. So I think that's a great thing to do, again, especially in a market that's as competitive as this. You don't want your buyer to find that dream home and offers are due that day and they don't have that pre-approval in place yet. So highly, highly, highly encourage you to have your buyer work with the Evergreen loan officer, get that Security Plus approval in place. I believe that typically takes 1 to 2 days. So it's a very quick process to get that approval in place. Then it kind of gives your buyer and yourself as the agent that peace of mind for when you do find that property, you want to move quickly. Even if offer review date isn't for a few days, I think we can all agree that getting that offer in as quickly as possible is just gives you one more leg up to the competition.
And one more question here. We're about 9:47 is our time, so we're doing good. Many times our buyers are purchasing homes without pre-inspecting simply because they don't have time before offers are due, and sellers favor offers without an inspection contingency. Can you accommodate this?
Yeah, so I mean, I'll put this in. I'll back up a little bit. So Evergreen, we're taking on quite a bit of risk by going out and buying this home for your buyer and what will hopefully be our future borrower. So we need to make sure that property is in suitable condition. And that kind of goes back to one of the ineligible property types, which is a distressed property or a property that is in need of significant rehabilitation. The way we think about it, if we were to grant approval on a property that was in near tear down condition, and maybe not even tear down condition, just needed some substantial improvements, our concern is we'd close with cash and then it would take the buyer months and months and months to get that property to a suitable condition for that loan to be approved and sold to one of the agencies, to Fannie Mae or Freddie Mac. In this market, contractors are hard to come by. They're extremely expensive. There's a long wait in a lot of the markets that we lend in. So that's why we do require that inspection to be completed and reviewed and approved prior to cash close.
Okay, so here's another tough one too. It's on inspections. So borrowers found their dream home. The home inspection finds significant health or safety issues. And those things can take longer than 10 days to remedy.
Mm-hmm.
So I think the one thing in answering this is to remember that the contract is between the buyer and the seller.
Mm-hmm.
And if it's contingent on the home inspection, the buyer and seller would then have to negotiate longer time to cure any health or safety. That's my thought on it, but Ken, sometimes you can add more color or
No,
see it
I think
differently,
I think that's exactly right. And Tamara, you mentioned this. We are a mortgage company. We're not real estate agents. We're not a real estate company. So we do our best to kind of get out of the way and let the agents be agents, and let you as a listing agent speak with you as a seller agent, and work with your clients to potentially negotiate some of those required repairs. Who's paying for what and when, and the timing of it all. I will say one thing I love about Evergreen, and one thing I love about this program, is it's not completely black and white. Every transaction is different. Every inspection is different. Every buyer's financial picture is different. So we're always willing to look at these situations on a case-by-case basis. So maybe in that situation there is what appears to be a major defect that needs attention and needs to be remedied. Well, if we can get really good assurance that we can get that resolved, that defect fixed or resolved or repaired in a timely fashion, then maybe it's something that we make an exception and we go forward.
So I don't know if you've seen too many new construction on the CashUp, but we do have a question that if the property is new construction, can we waive the home inspection?
Yeah, so we have seen some new construction properties, and ironically enough, I think I did work with the LO saying, okay, I still, I need an inspection. I forget exactly what I was able to get in lieu of an inspection, but it was something where it was some sort of certificate provided by, I believe, the builder, and I don't know if a third party also did some sort of walkthrough new construction type inspection. But I was able to get that, and yes, and I think that ends up passing muster.
And I thought there was one other thing I saw in here. We're kind of stuck on the home inspection thing right now.
Hot topic.
Oh, I know what it was. So as lenders, we're starting to see more earnest money deposits released to the seller. And that was something, because we aren't real estate agents, we don't typically get involved in who the earnest money deposit's being released to. We assume it's going to escrow. So in our program, the earnest money deposit should be deposited to escrow within the required timeframes as shown on the contract. But we have seen sellers that written in that the earnest money to be released to the seller. So Ken, did you want to comment how we've addressed that and what we allow?
Yeah, absolutely. And again, just goes to show just how competitive this marketplace is becoming. I think when we very first saw some of this activity, Tamara, it was kind of like, well, wait a second, like we're an all cash offer with little to no contingencies, and we can close in lightning quick fashion. Why does the earnest money also need to be released directly to the seller? But what we quickly found out in talking to our loan officers who are talking to you, the agents, is this is a thing. This is another piece of this competitive pie. And so we said, okay, fine. Like, yeah, we can accommodate this, and we can allow that earnest money to be released directly to that seller. So we do allow for that.
Great. Well, Ken, you've done a terrific job today, and we've answered, I think, almost all the questions. I think there's only one left in the chat. Oh, no, actually, we answered that too. So it looks like we answered about 28 questions in our chat.
Excellent.
And then we had our live ones. So I think that's all I have from the audience.
Great. Well, thank you very much, Tamara. All right. So hopefully you found this presentation helpful and insightful, and you're excited to get going with Evergreen. So please contact your local Evergreen loan officer. If you're not currently working with an Evergreen loan officer, no worries. Simply email us at cashup@evergreenhomeloans.com with your name and zip code, and we will match you up with a loan officer that's in your area. Lastly, I just want to say, if you can't tell already, between myself, Tamara, Mark, our marketing department, who I think does an absolutely tremendous job, we are all so excited about both Evergreen Home Loans and this CashUp program. So please do not hesitate to reach out with any questions after this presentation concludes. Reach out to myself at that cashup@evergreenhomeloans.com email address, or your Evergreen loan officer. We're more than happy to present on a smaller scale to your local real estate office, and really get granular with any specific questions you may have. So we are here to help. We are here to assist, because we really want this program to take off, as we know we're kind of at the front end of it doing just that. So thank you very much for all attending today, and have a wonderful rest of your Thursday and a wonderful weekend. Bye-bye.